Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, December 21st edition of DecisionPoint with your host, Erin Swenlin. For those of you joining me for the first time today, welcome to the show. And for my regulars, welcome back. We are going to get started pretty quick here. I've got lots of information to share with you, so let's just get right on to it. So today we'll be looking at the DP scoreboards, of course, daily and weekly charts. We'll do the monthly charts at the first show in January, and Carl Swenlin, my dad, will be joining us for that show. So mark your calendars. I believe it's on January 4th. So 1:30 Eastern, January 4th, and Carl will be joining us. So daily and weekly, though, today, excuse me. Mid and small caps, the big four. We're going to look at my DecisionPoint indicators. The climactic ones today are interesting. The short-term, intermediate term, and then my bonus for you is bear market rules. We've been talking about being in a bear market, at least I have, and some of our other commentators have. And I think it's important just to kind of review how you need to be thinking about your trades when you're in a bear market. All right, so let's start with the DP scoreboards. Pretty ugly looking, you must admit here, right? Lots of red arrows. We have got new long-term sell signal here on the Dow. That means that the 50-day EMA crossed below the 200-day EMA. And you can see the Nasdaq, we finally got a short-term PMO sell signal, and that came in on Monday. The only green one left is here for the Dow, and that's the long-term PMO. And that comes from the monthly chart. And that, I can pretty much guarantee you, will be a red arrow when the market closes on the last trading day of this month. We'll talk about it. We'll look at it. I will write about it if it happens at the end of the month while we're not recording live shows. All right, I wanted to give you a look at our DP sector scoreboard as well. So intermediate term trend model signals are 20, 50-day crossovers. Long-term trend model, like I just said, is 50 to 100-day EMA crossovers. What I wanted to point out is on the long-term trend model, the only sectors where we have 50-day EMAs above 200-day EMAs are staples, healthcare, real estate, and utilities. Those of you who think about sector rotation and understand how that works, these are the defensive sectors. You don't want to see all of the aggressive sectors on sell signals and neutrals in the intermediate term. And note the only ones in the intermediate term that are looking good right now are real estate and utilities. And I know Julius was on Market Watchers Live yesterday and talked about utilities looking better. So let's go ahead, and I am going to take you to our charts. Let's go look at some. All right, I'm going to start right up here. Let's go to our first one. At the top of the list is the Dow. All right, so here are a few things I want you to note about the Dow chart. And you're going to notice, oh, this is USO. Let's get not USO. That's not going to help at all. All right, just got to find my cursor here. All right, there it goes. I don't know why it disappears on me like that. Well, let's try it. There we go. All righty. Sorry to waste some time there. We've got lots to cover. All right, big one. There's that long-term trend model sell signal that came in this week where the 50 crossed below the 200-day EMA. You can see the PMO is now hitting lows for the year. Of course, it has been, honestly, since, well, it looks like at the beginning, mid-December, we were already seeing PMO lows that we had not seen all year long. And you're going to notice on all these charts, bearish confirmations, meaning you've got declining price tops and you have declining tops on your indicators. And we don't want to see that. So I'm going to take you to the weekly chart for the Dow. Let's look at it a little bit, stretch it out a little bit here. And you can see this week the damage that was done on this decline. and the damage is likely not to be finished at this point. It's been terrible. I start my new show and all I have is bad news. I really wish I had better news for everybody, but I am looking at this point. We are at a spot, if you look over here, and I didn't draw it in, where we had a little bit of top here and some consolidation. I mean, there's a possibility we might see a little bit of a relief bounce just because we have that little space in here. But I am looking more at 21,000. I think that's what we're going to see probably in January. I'm hoping we don't see it before the end of the year. It's certainly possible, but I would be looking for Dow 21,000 in January at this point. Now I'm going to show you the week or the monthly chart just quickly, and remember it's not final yet, but I wanted to point out that sell signal that is on board, and we will get that signal. We will write it into our DecisionPoint scoreboards on the last trading day of the month if it still exists. And looking at the acceleration of this PMO, I highly doubt it's going to be able to turn itself around in a week. So holiday trading as well. Okay, so let's move on to the Nasdaq at this point. All righty. And here we go. All right, Nasdaq, there's the death cross, the 5,200 EMA crossover. Again, we're making new lows right now for the year. We have a PMO that is now making new lows for the year. And again, these bearish confirmations, declining tops and declining momentum along with the price. And so that's a confirmation that's telling me that we should look for lower prices. The weekly chart for the Nasdaq, let's take a peek here. All right. The weekly chart for the Nasdaq doesn't look too bad. What I like about it is, we are seeing some oversold readings. We're not getting what we want. I mean, obviously, it's still accelerating downward, and we got that decline there. The next level, I would say, and honestly, I'm going to pull up the annotation tool because I think there's multiple levels here. And that's what I wanted to show you. So yes, we broke down below this low back here. That was an intraday or intra-week low, I should say. This is the area right here where I see some tops that could, and a bottom right there, that could be a support level. And we just now are touching it. So, maybe this is finally the time, on Christmas Eve, and everybody's feeling happy and jolly. Maybe Santa will arrive and we'll get just a little bit of a relief bounce there. 5,500 is the next level. I think that if we don't hold that, that's where I would be looking, is 5,500 for the Nasdaq. And again, we haven't quite hit those lows for the last 5 years, like we have seen on some of these other charts. Let's go ahead and save those. All right, OEX, I'm going to move on through here. All righty. Okay, so we have the PMO sell signal here also going on. We now have PMO lows, new lows for the year. Again, more bearish confirmations, and of course this huge breakdown. And looking at that breakdown on the weekly chart. Again, these weekly charts are pretty stunning. There we go. Major support breakdown. What I noticed when I started to mark my support levels where I saw some support, it looked, because I didn't have the Fibonacci tool out, it looked like a Fibonacci setup. So I decided to pull out my Fibonacci tool on the annotations. And sure enough, they really match up nicely on the OEX and on the S&P I'm going to show you. So it's helping us to really determine the serious support levels. The next one is at 1025. But I suspect we're going to get a retracement all the way down to 975, where we have these tops right here. And of course, that if we get that low, there's nothing to say we wouldn't come down and test these tops as well. But using the Fibonacci tool, I'm going to go with that 975 area. Now let's look at the S&P. Okay. Alrighty. Making sure I've got all my information in here properly. Okay. So when you're looking at the S&P, same sort of setups here, bearish confirmations. I mean, the OBV looks especially ugly, I think, on the S&P. And then when you go to the weekly chart, again, I think you can see that Fibonacci retracement in there. And while this doesn't match up really with the support level I'm looking at, it does still match up with these lows back here. So I would look for a retracement. Again, I think we'll test that 2300 level. I think that the next level is 2150, just like we're seeing here, and what matches up with these tops. And then I would look even for the retracement all the way down to that 1900 or 1800 level for the S&P. This could be very painful. And I mean, not to say it hasn't been already, but I would be aware there's still plenty of room and not a lot of support here. Maybe you can make a case for 2400 if you match those lows in that top right there. Maybe. All right, let's look at the small or mid caps and small caps. Again, so many features that are the same on these charts in comparison to, the large caps. All of them, let's face it, I mean, the majority of the market, you saw the scoreboards in those sectors, is suffering. And even those defensive sectors are still not really performing that well. They're performing better relatively, which is why we know that we probably are going to be having to suck up some more losses here. So there's your bearish confirmation on IJH, the S&P 400 weekly chart. Here you go. And this one, I think, like I said, 160, when I did look at it on the weekly chart, I think you could make a case for this being an area where we could get a little bit of lift. But when I'm saying lift, bounce, I'm talking temporary. I mean, we can't, just like you can't go up every day forever, you're not going to go down every day forever. Typically, you're going to get at least a little bit of relief here and there, at least a pause or two to kind of digest the decline. So at this point, there's possibility here. But I mean, the PMO, come on. The PMO and all these weekly charts, really ugly. Not liking them. All right, Russell 2000, let's take a peek at that. Again, bearish confirmations, 5,200-day negative crossovers, and no support level to be found on the daily chart. So when we move to the weekly chart, here we go. And you can see that the IWM has gone below what I was thinking would be support, like on the S&P 400. We've lost that already this week. Next up, 122 is where I'd look at these tops back here. I think that's certainly reasonable to look for as the next area of support. And, if we don't get the bounce this week, maybe we'll have to fall down to those next area of support on all of these charts. And for IWM, it'd be around 114. All right, indicator time. Let's pop on through here. All righty. So what I'm looking at, these are the climactic indicators, and these are very short term. It's one of the reasons we have candlesticks on this chart. Candlesticks are pretty much 1 day, 2 day patterns, which is why I don't generally use them, because I'm more of an intermediate term trader. All right, we're getting very climactic readings, but you know what? We have been. And every time we get bigger, I keep expecting that to be a selling exhaustion, especially when it's coming with these penetrations of the lower Bollinger Band. Now remember, I invert my VIX, because to me, in the very short term, high VIX readings are a sign of very oversold conditions. We're getting lots of fear, and generally that's when you see an exhaustion. I'm sure a lot of people's brokers are telling them that right now. I have a friend basically saying, oh, just wait it out. The fundamentals still look good. To me, when you see the fear continuing to go, we're seeing this pop below the Bollinger Band, and yet no exhaustion. We keep going down. It's like an selling initiation. So I think there's still a possibility of a little bit of a bounce or a rally, a little bit of relief next week, just because we have such climactic readings on breadth right now, in conjunction with very high readings on the VIX. So in the very, very short term, day or two, maybe Christmas Eve, we'll see a little bit of relief. Short-term indicators, very, very oversold. And of course, oversold conditions we generally get very excited about. However, we're still heading lower. And we could certainly see these oscillators get much lower. But what we need to see are a turnaround. We need to see them bottom. We just need to see them, they're hardly decelerating. They're decelerating a little bit, but we're just not seeing that. We need those bottoms to come in. But you have to really be aware. Now, we had a big correction here. We got those oversold bottoms. And yeah, we did get a little bit of rally here, right? But it wasn't over. You know, we weren't over with the correction. We still had more to go. And look at this oversold reading. It amounted to just about nothing good. So oversold readings in a correction or a bear market, don't expect the bullish outcome. Generally, you're not going to see that. So you always should be prepared for the bearish outcome. And right here, you can see that 2400 level right there holding currently. Barely. Intermediate term indicators, definitely worrisome. They suggest we certainly could see more downside. They are in oversold territory. However, they can get more oversold. Look at these lows we had back here in 2016 off of that correction. And we're not that low. And we're not turning up. And we're not decelerating. All of this not good to see on the intermediate term indicators. Don't like it. Nope. No, sir, I don't like it at all. UUP, let's start going through the big four. Like I said, I hate to do the fire hose effect here, but, you know, hey, we've got a lot to show. All right, so let's go ahead and take a peek right now. We're looking at the UUP daily chart. We had a rising wedge, which I had pointed out Wednesday. We did get the breakdown from it, but today we popped right back up. We had a nice little rally on the dollar, 0.2% up. But I'm not bullish on the dollar at this point. We do have a very flat PMO. It's still heading lower. It's tried every time to get above the signal line every time we had these little rallies. And despite being in a rising trend, no possibility of that. So we now have a big margin to cover. And I would be looking, you can see in the thumbnail too, the tops on the OBV are declining. And so all of these are not good news for the dollar. I think, you know, we may be able to connect that one low that just happened yesterday, but I'm not ready to connect that with the other low. And that would probably make it look like it's in a rising trend. But I don't feel comfortable annotating it because I don't think it's going to continue in that trend. Right now, it's in this little trading range, I'd say between 25.75 and about 26.20. I suspect we're going to, at best case, we'll see more of this consolidation sideways. Best case. All right, let's move on to gold. Oh, I'm so excited. I'm going to have plenty of time to give you guys a summary. All right, let's take a peek here. Gold's daily chart. We are in a rising trend. I am bullish on gold. I know yesterday when Julius DeKempener was on the show, Tom, Julius and I both argued about gold, but we argued for bullish reasons. We all three, and come on, Tom and I don't always agree. We all agreed that gold looks good. And of course, when Tom agrees gold looks good, gold must be looking good. He's not big on the metals. So I think it looks good. I've thought it has looked good. It's just taken a while to get itself going. And I think with the uncertainty in the market, this is going to be a place people go. I will say, full disclosure, I am in it, GLD right now. I think that this is one of the few areas where, we've got a decent hedge and a possibility of weathering through the storm. And when you look at the weekly chart for gold, I think you can make a great case for it as well to continue on this rising trend. It looks so nice here. I know you could make a case maybe for a reverse flag here, but to me, this would be a flag that's a little long in the tooth. I don't want to see a flag the same size as a flagpole. It's not a flag to me anymore. But we're in the rising trend, and you can see that pop up here, ready. You've got the faster EMA getting ready to come up and cross that slower EMA. All of this is good. So I am bullish on gold. Oil, oil. Not looking good. This was the last chart I had up when the program started. Reverse flags. These are reverse flags. You look at the length of this flagpole on West Texas crude, and now the flag, and now the breakdown. And a flag formation, the flag pattern, how it works, the length of the flagpole, top to bottom here. When you get the breakdown, you add that amount to the breakdown point. So what are we looking at? 50 to, well, let's be nice and say 75. That's a $25 difference at that breakdown level. 50 minus 25. Yeah, I don't think we're going to get down to $25 a barrel. Please don't be running around telling people that. I'm just saying that with these reverse flags, we can definitely see lower prices, even though it seems like we couldn't or can't. And look at the weekly chart for oil or USO. We've seen it down all the way down to that $8 level back in 2016. That was the bottom. So watch closely. Right now we're holding that, just above $9. I want to watch this closely, because if we get down to that $8 level, that might be the place. That might be the place to maybe at least ride up, USO being a low price. That could be a good spot for us to pick it up, but not yet. I think it could definitely go lower. TLT. Bonds definitely benefiting from the market on its way down, and this, like gold, is another place that people tend to bring their money. I'm thinking about TLT. I've not purchased it, mainly because I'm seeing quite this rally. We did get this little breakdown though below 121. Watch this closely as well. If we can get down to that 119 level, honestly, I think that could be a good level to pick it up. We need to get the PMO. It's still not as oversold or overbought as it could get, but it's pretty close. And so we'll want to watch those overbought conditions. In this case, TLT is almost in a bull market situation. So I think expecting bullish outcomes on TLT makes sense. And finally, we're going to finish here with the weekly chart for TLT. Carl had been watching a head and shoulders, a very large head and shoulders pattern that have formed with that high back in 2015, the high in 16, and then the highs we got here in 17. I continued to hold on to that pattern, even when we got the bounce here off of, what was sort of the neckline. I was still holding out on this one. But as soon as we got the breakout from this declining tops trend line, that's when I call it quits on my head and shoulders patterns. It's where I call it quits on a lot of my patterns. If you break that declining trend from that head and shoulders, you know what? Now it's time to start looking for a different pattern. We've got a PMO buy signal that's come in. Bonds are looking good. All right, so I want to go, and we're going to finish off with looking at bull and bear market rules. So let's go on through. Okay, I want to skip these because I want to have time. Here we go. So let's start with the bull market rules, right? You're in a bull market and you have overbought conditions. What do you start thinking? Well, it's a bull market, so it doesn't necessarily mean that we're going to have a huge downturn. We're in a bull market, and you can relieve those overbought conditions internally. Oscillators have to oscillate, so you can see that. Think neutral, like our DP trend models. When we have a bull market configuration and the 20 crosses below the 50, we don't go into a sell signal. We go into a neutral signal. So think about overbought conditions as more neutral in a bull market. Oversold conditions, hey, that's what we want to see. Oversold conditions in a bull market, that's your buying opportunity. So we want to do that. So the main thing is expect bullish outcomes in a bull market. Expect the chart patterns to break to the upside. Expect, all of those. If you have a bearish pattern, expect it not to execute in a bull market situation. And again, the way DecisionPoint determines whether you're in a bull or a bear market is where the 50-day EMA is in relation to the 200-day EMA. So if it's above, bull market rules. If it's below, time for some bear market rules. And this is where I think everybody should pay just a little closer attention, because I believe we're in a bear market. If nothing else, we're in a very difficult correction. And that's still, I would follow bear market rules in a correction or in a true bear market. What happens? Overbought conditions, we expect a new down leg, right? It's a bear market. We get overbought, it's time to look out below. Oversold conditions, right? In a bear market, yes, maybe we're going to get that rally. We're going to come out. No, we could, but think of it as thin ice. You may be able to get that bounce, but you may end up falling through the ice as well in the bear market. The other thing is when you buy in a bear market conditions, you always have to remember oversold conditions are dangerous. So buying in general in a bear market is dangerous. We just have to be especially mindful. All right, what do you expect in a bear market? Expect bearish outcomes of chart patterns and breakouts and breakdowns. If you're in a bear market situation like we are now, start expecting those bearish outcomes. Hey, I got a bullish pattern. Well, the likelihood of it actually processing, if you recall, we'll go over and look at something and I'll show you what I'm talking about. But don't expect, expect the bearish outcomes. Don't expect the breakouts, expect the breakdowns. All right, so I'm going to just take you back. I want to show you what I'm talking about just a little. We have a few minutes. Oh my gosh, I keep losing my cursor. All right, there we go. Okay. So what I'm going to show you, let's see, I think it was on, it was a McClellan oscillator chart. That's what it was. I'm going to go get that because I thought it was really nice. If you like these charts, these are already set up for you in the DecisionPoint Market Indicators chart pack. So here's what I was looking at. Oversold conditions in a correction or bear market are thin ice. All right, let's look back here. We were in a correction. We got these oversold conditions on the summation index. You can see we had some on the McClellan oscillator as well. And yeah, we got a little bit of an upside, but really what happened over the next few months was mostly sideways. It wasn't a great rally. It didn't turn, and then of course it turned ugly after that, and we had to test that low a second time. Here's another example, very oversold conditions, clearly in corrective mode. And it comes in, and what happens? We get a little bit of a, little relief rally, and then we're back down. And that's because we're in a bear market situation or correction situation. Back here, okay, I'm going to show where I didn't mark them, but we have oversold conditions, and what happens? We end up seeing it rise like it should, right? Oversold. Now we're looking at bear market configurations. The last oversold conditions we were seeing, we did get a little bit of a rally off of this one, but again, we weren't done. We weren't done. And we did end up moving even lower after seeing the summation turn down below the zero line. All right, well, I hope you enjoyed today's program. I am going to let you know again that you can find our program on Fridays at 1:30. So be sure and come check me out there. And I really appreciate everybody joining me. So have a great weekend. Have a great holiday, because I won't be talking to you until January next year. All right. Bye, everyone. Happy charting.